since interest rates started climbing over the summer, the bond market alternative stocks have gotten slammed, especially the real estate investment trusts. Take EPR Properties, a real estate investment trust that owns an eclectic mix of entertainment, recreation, and education-related properties, from megaplex movie theaters to retail centers, golf complexes, ski parks, casinos, and charter schools. Now, at the beginning of this month, EPR reported a solid quarter. The company also announced that it's shelling out $700 million in cash and stock to beef up the recreational side of its portfolio. Although what has people worried is that perhaps $647 million of this, in some form, will be in stock. And the sale of the stock, which is expected, could create a serious overhang, given that EPR only has a $4.5 billion market cap. How are they spending this money? EPR is buying the North Star California ski resort near Lake Tahoe, along with 15 amusement parks and 5 family entertainment centers for $456 million. And they're also offering $244 million in debt financing to Oxzif Real Estate in order to get their hands on 14 CNL lifestyle ski properties. Basically, CNL is winding itself down, but EPR didn't want to buy all their assets, so they brought in Oxzif and gave them what's effectively a really jumbo mortgage to buy the properties they didn't want. EPR likes these because they're high-quality assets that will help boost their exposure to the experience economy. But the reaction on Wall Street's been mixed because shareholders don't like dilution. Candidly, the transaction is a little confusing. We've got to find out more about it. Plus, while I like that EPR gives you a 5.4% yield, you have to remember that rates are rising, and that makes all dividend stocks less attractive. So what do we do with a company like this one that's been such a winner over a long period of time? I say let's take a closer look at Greg Silvers, the president and CEO of EPR Properties, learn more about all these recreational investments these companies making and where his business is headed. Mr. Silvers, welcome back to Mad Money. Good to see you.
Good to see you. Thank you for having me.
All right, Greg, it is a hard one. It's hard because the assets are terrific, but the stock is a huge chunk of stock, and the company you're buying from is in liquidation mode. So presumably that stock is going to hit the market, and your company doesn't have like a big buyback or anything, doesn't have big institutional sponsorship. What happens when that stock hits?
Well, remember that we're actually issuing the stock to CNL, and they have an obligation to transfer it down to their retail holders. So we have a strong belief that, you know, paying a strong monthly dividend, that these retail holders, this will become part of their portfolio. To the extent that we need to consider if there is some kind of overhang, we're going to consider that with our board. Do we need to institute some sort of buyback? Is there something? But this is a highly accretive transaction that's going to drive our growth. Even this transaction is 17 cents of accretion on an FFO basis. So a very strong, we've structured this very well. We were very disciplined in our approach. And we think this will be a positive both for those shareholders that stay with us and future shareholders.
Well, do you think they'll understand it?
Well, we hope so. We're going to spend some time. We've put out an investor deck that explains kind of our thesis for doing this, why we like these assets, also about our company, so they can understand that we've got a 14% total shareholder return, compound average return over our lifespan of 18 years. So this is a good stock to hold for retail shareholders. We think it's a strong with a monthly dividend, should be part of anyone's portfolio. So we think we've got a real good chance at keeping a substantial amount of these.
And how about the deal with Oxzif? That is not necessarily something that I've seen you do before, but maybe over some point you did it.
Well, for us, it was really about, we made a decision internally about controlling our our exposure to ski. So we said we want to keep that at about 10%. To do that, including the value of the mortgage, our ski portfolio will be about 10%, but it allowed us to create that extra level of credit. We've got approximately 3.5 to 4 times coverage ratio on this. So we took an asset that had some volatility, and we actually strengthened the credit behind it and created a lot more cushion, so that we think this is a far superior transaction.
All right, so now the pastiche of different operations is a little skewed more toward experiential, which is something you understand better than anyone.
Yes. I think when you look at across our portfolio, that's what we've said is this kind of makes us kind of the premier player in the recreational space, doubling down on that experiential economy, whether that's in our entertainment or our recreation. And we feel, as you say, we understand that demographic group and what are the drivers of that, and we've been very successful with that.
New administration coming in, Secretary of Education from charter school background, has to help your charter school business.
Yeah, I think we would believe that with 3 million kids in charter schools, we were kind of a little bit past the political, but there's no doubt these are tailwinds. When you talk about kind of her sponsorship and her her belief in school choice, whether that be on the charter school or a private school, we feel that this will only increase the trajectory of growth for that segment for us.
And how about that kicker that I like so much, the casino situation in New York?
Again, we're under construction. It looks on plan. Again, there's no doubt that the New Jersey vote or failure to approve is going to help the situation. But again, we're looking at the progress continues. In fact, we're probably a little bit ahead of progress.
All right. So now let's go back to the CNL. What is the actual time frame? They have said that they are going to liquidate. Mm-hmm. Is that over a series of days, weeks, months, years? I mean, what is the period this is going to occur?
The period will be, well, they're going to go for shareholder vote. There'll be an S-4 filed here shortly and a proxy seeking that vote. And again, we didn't buy everything. They'll have a few more assets. They'll continue to liquidate. Mm-hmm. But we think into first quarter, beginning of second quarter, we'll have the vote and we'll close on our transaction.
So there'll be some time for everybody to understand what's going on.
Absolutely.
And then finally, how's Topgolf doing?
Topgolf continues to do incredible. With every opening, they continue to set new records. So again, we're actually getting closer to you. We had a recent opening in Mount Laurel. There's some things that continue that get on. So as we move closer to the East Coast, people get to experience that and understand it even more. But it's done phenomenally well.
And do we worry that year over year we've got Disney? You mentioned it in your call. We do have a big problem in the sense of year over year for Star Wars. Mm-hmm. But the 2017 slate looks good for your movie.
The 2017 slate looks great. I would say 16 we were a little worried about coming up against the Star Wars, but we're coming into the holiday season up about 3 to 4%. So we're actually going to finish positive for the year, which coming off of a record year.
That is surprising.
It's exactly surprising.
That is surprising because that was just an incredible year last year. All right, well, look, I'm glad we understand. I want everyone to understand because I don't want them to come in. I mean, look, there might be a dip in the stock. We know that.
Right.
You're very candid about everything that could happen. I really thank you. That's Greg Silvers, the president and CEO of EPR Properties, which has been a big win for us. But I really want you to do your homework because I love a monthly dividend, but there might be a better time to buy. Just have to put it out there. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.